Hi, welcome. Mary Ellen McGonigal here, Senior Managing Director of Equities at Simpler with your weekly Edge show. Today, we are going to take a look at some of the more impactful news that drove yet another volatile week in the broader markets. And from there, we're going to see where we closed and take a look at the S&P 500. Did we close above support where we are now and what we can anticipate going forward? From there, viewer question of the week, and it's all about whether we did hit a bottom in the markets and what we may need to see if not. So let's go ahead and take a look at some of the news last week. We did get two individual inflation-related reports, the CPI Core Price Index, as well as the PPI Producer Price Index. Both reports showed elevated core levels of inflation, which in turn drove the markets lower. We also did see a continued rise in the US dollar. While interest rates pulled back, they still are elevated. We'll look at that and see the impact in and within the markets to that activity. Also, the markets did end lower despite a very sharp rally that took place today on Friday. We'll look at that. And then volatility, it does remain elevated. It's above that 30 level. We'll be on the lookout to see where that level needs to be in order to provide us with confirmation or at least confidence that the markets can trade higher. Also, next week, we will get retail sales and housing data that will provide further insight into where we are as it relates to the economy and then hence the markets. So from here, let's go ahead and take a look at those broader markets and see where we closed. Here we are looking at a daily price chart of the S&P 500. And today we did get a nice 2.4% rally in the S&P 500. However, we did close the week below this February 25th low at 4115, and we can see that your next near-term area of support is nowhere in sight. We will get into that. I will with my MEM Edge report this weekend. If you haven't already, go ahead and use that trial button below, and it will keep you totally tuned in, not only to the broader markets, but what to anticipate as it relates to the broader markets. So from here, we can take a look at some of these indicators, and they are momentum related. The RSI continues to trade below this 50 level, so it is in negative territory. Likewise with the stochastics below that 50. So we are still in a downtrend in the markets with negative momentum indicators. Let's drill down a little bit further. Take a look at some of these S&P 500 sectors. I've gone ahead and added an RSI relative strength indicator to this 2-month daily price chart view, and I'm going to go ahead and sort it in descending order. We want to see where the relative outperformance is currently taking place. And here we are up here at the forefront. Energy remains in leadership status, and the group, while it was down, certainly in line with the broader markets, it is still up here at the forefront due to its relative outperformance. From here, the remaining industry groups up here are defensive in nature. This is consumer staples, XLU, utilities, and healthcare. Each of these are areas that fare better, certainly in a downward trending period in the markets when there is uncertainty. And then they also do provide generally higher yields and fare well during periods of high inflation. Down here in this lower quartile, these are your underperformers. We can see real estate continuing to come under selling pressure. This is an area that when interest rates are rising, the REIT stocks within that real estate sector are not as able to grow their portfolios as it relates to buildings and so forth, so that the group is being impacted. Also, their earnings were not so great for that fourth quarter, as well as the outlook going forward. From here, we're going to drill down even further, take a look at some of those underlying sub-industry groups in the broader markets. And here we are with another 2-month daily price chart view of select ETFs that are really helpful as far as helping you get a sense of what's driving this current market action. And first up here, again, I did add that relative strength. So up here are your stronger areas. And I did mention in the beginning that the US dollar is continuing to climb, and that's pretty significant. I'm going to pull up a weekly chart and you'll see really how it's just taking off here of late. From here, we can take a look at the sub-industry groupings, and you'll notice that gold stocks are really lagging. Commodity stocks do tend to suffer when the US dollar is in a rising mode. So also, we can take a look at the yield on the 10-year Treasury. And we can see this has also been on the rise. It did pull back just a little bit this week, but rising interest rates as an environment are not constructive for growth stocks. So we are continuing to see downtrending price action there. The Semiconductor Index did close the week positive, however, still in a very confirmed downtrend. And this is that stronger area that can do well when the markets are faring well within technology. From here, let's go ahead and take a look at that volatility index. I mentioned that it does remain elevated. We did close the week at about 29, and generally speaking, on average, this volatility or fear index, if it's in that 18 level down here, that is a more normalized market. It does allow the markets to trade higher. With elevated volatility, we can anticipate further downside for the broader markets. One other area I did want to highlight and point out to you this week is this Brent Crude Oil. While we are down a little bit from last week, it remains elevated at this 111 level, which will continue to support growth and strong sales numbers from these oil companies going forward. From here, I do want to share with you ways that you can stay on top of the broader markets. And first up, as far as what I would need to see to turn constructive on the broader markets, in addition to a bullish chart of the S&P or the NASDAQ, I will want to see these heavyweight FANG stocks, Facebook, Apple, Netflix, and so on, come back to life. So here we are looking again at a 2-month daily price chart of each of those stocks, and you can see they remain below these simple moving averages, in this case a 50 and a 20-day simple moving average, with some stocks such as Amazon really well below these key areas of upside resistance. So I will be keeping a close eye on these FANG stocks as they continue to deteriorate overall. One other way that you can stay on top of what is taking place in the markets, and certainly today, Friday, we did get a sharp rally. I'm sharing with you a list of the 100 stocks in the NASDAQ 100. Quite simply, here are the names sorted by their highest percent change today on down. And what I'm keying in on beyond that is this stock chart's technical rating. The higher the number, the stronger, the healthier that chart is. And then the lower the number, the weaker the chart. And we only need to look at this top name, Lucid, to see how the chart is really down and out. So as we scroll through these top performers in the NASDAQ 100, you will note that a lot of these scooter ratings, stock charts technical ratings, are single digit or low double digit. So in essence, today's bounce was comprised of an awful lot of beaten down stocks, a lot of bottom fishing taking place, nothing really worth getting overly excited about as it relates to a possible reversal in the broader markets. One last item I did want to share with you is this map view as another way to get a sense of not only what occurred today, but this past week. This is Friday, and this particular view is highlighting those bigger boxes are those FANG stocks, those heavyweight names. And then the brighter the color of the box is telling you that that stock, if it is bright green, has far outpaced its peers. So we can see NVIDIA here up 9%, a lot of energy names. And in addition, we can see other areas that kind of sprung to life here today. And while it's interesting from here, I am going to share a view of a 1 week. This is at the close of the week. And really, you'll see that today's rally, while it was certainly exciting, we can see these bigger FANG stocks still ultimately down for the week, a lot more red than green in this overall map of the S&P 500. I'm going to leave it at that. Everyone, I hope you have an incredible weekend, and I will look for you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.